Is it a high enough jumping off point for you, as Rick Reeder said at BlackRock? Is that diving board high enough to tempt you in?
I think it's getting into buying territory, Manus, on a 10-year. And I say that because when you look at some of the fair value estimates for the 10-year Treasury, really it's a function of a few things, which is growth, which is inflation expectations, and central bank policy. And what we really had a repricing of right now is not so much inflation or growth, but the central bank policy expectations. And that's what pushed the 10-year back to that 408 level. So now that we are kind of, once again coinciding with a fair value territory on a 10-year, it is tempting to be adding duration. Is it a screaming buy? No, probably not. But I think Rick's point is well taken, is as we do get these pops in yields, investors do want to buy those because keeping the eyes on the prize, so to speak, if we are going into an environment where the Fed is going to be cutting rates this year, then the 10-year Treasury yield should fall, the 2-year should fall, and really all sorts of fixed income should do well as a result of those yields falling. So I do think you want to buy those spikes in yields. Give me a level on the dip in the 10s, and then I'm going to move to Mike. If you make a call, you make a price. I mean, I think anywhere between 4.1, where we are today, to 4.4 is really an interesting buying territory. That's what I would go with.